All right, let's get things started. Good morning, everyone. Doing a little audio video test just to make sure everything's working fine. All right. What do we have today? Now we have another update on Topstep. So I'm going to show you how to put in those awesome coaches levels on the chart. All right, so I've got my Topstep here. Now I have the crude oil chart. Now, obviously, for the coaches levels, some of them are mostly on the widely traded instruments such as crude oil, ES, NQ, gold. So if you want to have those levels, for now we have Hoag's levels, so we have weekly kickoff levels. So how do we do that? So if you want to see those, you go to indicators and then you look for Topstep, and it's going to say Topstep daily levels, right? If you want to have this somewhere easily accessible, you might want to add it to favorites. Okay, so you click on that and it's going to plot the levels on the chart. Now for now there's quite a lot of stuff there, but it's what's really important is that we have the weekly kickoff low, weekly kickoff high. Those are the two that I like to track. And also you have last week's high, yesterday's value high, yesterday's point of control, settlement, like a whole bunch of stuff. So if you don't want to see all of that, you can actually switch them off. So for now, I'm just going to leave Hoag's levels on there. And here we are. So we have Hoag's weekly, what is this one? Let me change to like different time frame chart because we can see it better. All right, weekly kickoff high is 77.25, weekly kickoff low 71.19. You can also change the thickness of the actual line and the color. So let's put a nice sort of strong pink. And we're going to change the thickness as well, which you can't see. It's slightly outside of my screen here, but I've just changed the thickness. You can see it's much thicker. And then you can have really nicely strong line on the chart so that you can never miss Hoag's weekly kickoff levels. Now, why is that level important? Hoag has a very unique way of finding these relevant levels. So for me, I'm always reading that email, and I'm so happy that they've done this. Now, as time goes by, they will be adding some other coaches levels. So we have Coach Jay, we have Coach Ray, we have Coach Paul, Coach Vince, like a whole bunch of people who have levels up front that they might be watching. So that's all coming, and you'll be able to plop whichever coach's level you want just by using this simple indicator. So now if I go to indicators, because I've placed it in my Topstep favorites or in my indicator favorites, it's going to be right at the top. If you want to see things like previous value low, value high, that's now also there. So yesterday's value high, value low. That's quite useful if you don't have a market profile indicator elsewhere. So it can actually tell you exactly where those are. All right, so really nice feature. So Topstep continues to bring us some innovative features. And I mean, on which other platform do you actually have coaches levels that, you know, we're actively watching? We're active traders. We are using those levers ourselves. However, before I continue, I just want to make sure that everybody's 100% clear. This is it's not a signal service. Just because we have weekly kickoff high at 77.25, that doesn't mean that you're automatically going to go short, because it's down to the context. So don't use this as a, oh yeah, this is a low, this is a high, Hogue said go short at 77.25. It's not a signal service, right? So contextually, we have to make sure that those levels make sense in light of what you're trying to do in your own plan. And anything that we're talking about here, obviously neither of it is a signal service. You know, if I go short on copper, that doesn't mean everybody should be going short on copper. This is educational only. We do have a Topstep disclaimer somewhere, if I can locate that. So let me see if I can find that for you. Probably should have prepared the link before. But yeah, so don't take it as you know, signal service. Oh yeah, Hogue said go short here, go long here. That's not what these levels are all about. They're just levels to watch out for that may cause a reaction in price. Now, whether we get a reversal or a run through the level, that's an entirely different thing. So use these with caution, but they are there on the chart for you. Still looking for the link. Where is it? I don't really see it here. I don't know whether my lovely moderator Bruno can find that Topstep disclaimer for us, just to make sure everybody's on the same page and we cover the compliance, and then we can move on. So Amanda says, why does RBOB be so slippy up and down? Well, you see, RBOB and crude oil are both slippery products. So I actually have merchandise from my own company, Market Stalkers, that actually has t-shirts and mugs that says crude oil is slippery. Exactly for that reason, right? With a massive chameleon on like as a logo. So one of the reasons why I say that is because it was like a little joke that we used to have, oh, you know, crude oil is slippery, when RBOB is even more slippery because it's a thin product. If I pull up RBOB ladder, now you know how we've been complaining, oh, you know, NQ is so thin you can floss with it, or at least I've been joking. That's been a feature of RBOB and some of the other products that I trade. They don't ever go into like really thick markets. What is the difference between thin and thick markets? Well, when you look at the dome ladder, if you see, let's say 150, 200 units per every price point, that tends to mean that that market is thick. It's a thicker market. There's a lot of liquidity in it and a lot of contracts available per every single price. So what is all this? Like, some people are just staring at the ladder. They don't even understand what it is. It's literally just all of the stuff that you see. They're limit orders up for grabs for anybody. Anybody. Now, depending on the size that you trade, you will be put either at the front of the queue with a clearinghouse if you're trading small size, or you will be put at the back of the queue if you're slinging size like 50, 100, 150, 200 contracts, right? And for the most part, if you watch something like ES, actually let's have a look at ES to see what's going on there as well. Yeah, see the difference. So I don't know how well you can see that. Let me try and mute myself because somebody just knocked on the door. All right, hopefully that madness is over. I have Pomeranians and Cavapoms, which like to pretend that they're watchdogs. So every time the door rings, they go a little bit crazy. All right, so if I show you the ES chart, the ES DOM, you can see that the difference is pretty staggering. Now, this is actually pretty thin for ES in general. Usually there's about 80, 100, 120. So I would say that while this is still a thicker market, this is very unusual. And it kind of looks more like crude oil ladder rather than ES ladder at the moment. So usually you should see 40, 80, 120, 250. But we don't have any of that. So this weirdness that we've been having in the markets is still there. But the difference is that we still have some liquidity in the ES. So, 36, 24, 21, 41 contracts available. And then if I go back to our Bob, look at that. Nothing, 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 3. 2, 1, 2, nothing, 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 1, nothing, 1. It's, I like to call it tumbleweed, 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 some contracts, tumbleweed, tumbleweed, contracts. And that it signifies an extremely thin market. And it's a feature of gasoline, it's a feature of platinum. Crude oil is a little bit thicker, but still not as thick as some other markets. But right now, ES and crude oil pretty much look the same. They have about the same number of units available per contract. Now let's see NQ again. Yeah, so now NQ, which used to be a thicker market with 20, 40, 60 units available per every price, it now looks like our Bob. So this is very dangerous. If you've never traded instruments that are gappy when it comes to liquidity, the spreads will get bigger. So let's say that you want to execute an order right at let's say 83.49.50, but there's no contracts there, so it's going to wait until it actually goes up to 50, where we do have a few contracts available, and then depending on your size of the contracts that you're trying to trade, it might not fill you entirely. So it might fill, depends on how the platform is set, but you can either set it to fill or kill, which means fill everything or not at all, or you can set it to partial fills. And if you set it to partial fills, that's fraught with difficulty, because you might get filled just like one contract out of the, let's say, 10 that you want to be in on. And then it might fill you somewhere else while it's kind of waiting for more. This is the danger of trading gappy markets. I've grappled with gappy markets all of my life. So, well, not all of my life, but, last 10, 11 years or so. And to me, this is nothing new. However, at the same time, these sort of moves do lend themselves to very slippy, teleporty type moves. So how Dolby says, teleporting, price is teleporting. Well, price can definitely teleport from one price to where there are contracts available in the blink of an eye. And this is why we say size down, don't trade if you don't have to, make sure that you're not sizing up too much if you've never traded these sort of markets. It's very tricky. The spreads get bigger. You think that you're getting one price and then it fills you somewhere sort of 10 points where you didn't really account for in your stop loss, and suddenly your stop is not 20 points, suddenly it's 30 or 40 or 50. It increases risk massively, and that's why we're saying be extra careful this week. Something odd is happening especially with NQ, and this is not normal for NQ. So somebody's pulled nearly all of the liquidity out of NQ. We don't know why. Obviously, there's threats of recession, war. We had some bad numbers coming out. So all of that could be just brewing behind the scenes something's up. Let's just put it that way. Yeah, Sarah Lucas says, my house is the same as my dogs have little man syndrome. Mini Daxies. Daxies have quite a voice, don't they? These guys, they scream, but Daxies, they can, they're they have big voices in small bodies. I always find it very funny. Can I see heating oil DOM? Yes, you can. Here we go. Again, very gappy, even worse than our Bob, I would say. This would cause a 1, 2, 3, 4, 5, 6, 7, 8 point spread. So if you want to short it, you would have to wait until 29.50 in order to get any contracts. So if you kick off an order here, it's either not going to fill or you're going to get a very, very big spread. So 9 points is generally massive in futures. Perry says, Topstep levels not available in micros. Yeah, I mean, micros follow the main product, the mini, very, very closely, probably to within a couple of ticks, maybe even better than that. So you can have maybe 2 charts, one with the full contract on just for the sake of weekly kickoff, high and low, and other lovely coaches levels. And then just trade it on, the regular micro that you would use. So I would say that's a better thing to do. Did I have a trade heating oil? No, so I don't do what's known as the crack spread. I mean, those names are just hilarious. So basically, the crack spread is I suppose it would be yeah, it's a spread trade. So you have various ways to take advantage of it, but usually it involves crude oil. And then its derivatives, heating oil and gasoline, in very particular ratios, in order to kind of take advantage of some market inefficiencies that might exist at the time. But again, that's not something to be doing on Topstep because those sorts of spreads are supposed to be held for quite a while, and typically you have some calendar spreads that are used as in that technique. I mean, somebody who's actually someone who has done the crack spreads. It's actually Brett, our risk manager. So I don't know whether you knew that, but Brett was a crack spread trader, so he knows a lot about it. I've never traded heating oil. I've traded crude oil extensively, RBOB a little bit, but more so this year. But I trade them as separate instruments. Sometimes I will look at the crude oil chart and RBOB chart to make sure that I am not completely just locked into RBOB without seeing what's going on in the main product. So kind of like as if you're trading like NQ and ES, and then you have ES chart open to see what it's doing with its levels. Did it reach VWAP? Is it reversing at VWAP? And then you would make your decision on how to position yourself on NQ. So that's kind of the same idea. So you have crude oil open, and then you trade RBOB as a sort of a more liquid product with more ticks in it, while also trying to limit risk, which can be a little bit tricky sometimes in RBOB. Damon D says, good morning, D. I'm finding VWAP as a useful indicator. I've been backtesting. May you review your strat for using VWAP? Yeah, sure. We can review that. I almost always have VWAP on my chart. So let's see what's going on in the market so I can find something that's moving so we can maybe find a better example of how to use VWAP. What's going on in copper? Copper has been the darling. All right, so I'm just going to use my charting platform because I'm extremely fast with it, and I can easily switch things. Okay, so overnight VWAP on copper is up at about 398.97. So the first thing that I use VWAP for, and I have many uses for it, is just to gauge how far the price is away from it. So are we actually moving overnight, or do we just stick with VWAP as the average and we don't really have much going on? So that's the first thing, especially during London. If I'm going to get involved in any sort of a move, I want the price ideally to be either coming back to VWAP after a mean reversion trade, or to keep moving away from it. Now this is anchored to yesterday's Globex open. You can also anchor your VWAP to the session. Now the session VWAP tends to be closer to the current price, obviously, especially in the first parts of the active session. So one way that you can use the session VWAP is as a bounce point intraday. So let's say that now copper is creating some single prints to the downside, but we also have VWAP that is just in those single prints from, just for reference, single prints have been created from 97.07, this is copper, all the way down to 96.54. And we have session VWAP right there at 96.65. So one way that I might use it is to monitor what price does when it gets to VWAP. Now this is a directional move, so ideally I wouldn't want to go against the directional move, but one time that I might do that is if we get a lot of volume going through VWAP in the other direction. Now, sometimes there are certain setups where VWAP will act as a springboard, not all the time, because a lot of the times there will be a stopping point, but for something like, let's say, a failed auction or gap fill or any kind of a trade that is a momentum trade and it's not a range bound day, that's my second use for it. So either as a bounce point, confluence, or as a reversal to kind of carry on with a directional move. And the final way that I use it is as a target, either for a mean reversion trade, like let's say we drop off even further on copper, and we get down to the average session range low for London, which is currently at 393.41, and then I see the price reversing with quite some force, so I run a trade all the way back to VWAP. That's one use as a target. And now let's imagine that we have a neutral day type. So we have extensions of the first hour trading range, which is called the initial balance, to both sides. So now you have like an elastic band. You have two forces pulling on either side of the initial balance range. Is it a good thing to get involved at VWAP on a range-bound day for a directional move? Of course not, because we have a neutral day. We have forces pulling from the edges of the range, of the session range, back to the middle. And typically VWAP, whether overnight or session, it will be a case by case, it acts as a sort of a pullback. So it's good as a target. So I don't like entering trades on a range-bound day right at VWAP, because it means that you're entering in the middle. And on a neutral day, range-bound day, entering in the middle is going to go against you, right? There's no edge there. We need some sort of an edge, some sort of an asymmetric opportunity on range-bound days. And where do we find those? Typically, we will find those at the edges of the session, not in the middle. This is something that I see people do all the time. They're constantly chasing momentums, and it's like, yo, we've got a range-bound day. Like, what the hell? Just wait for the edges to appear, but limiting risk and increasing your risk reward, even on a day when everything's just barcoding. If you know where to look and when to look, it can be a beautiful way to just print money on those days. And equities probably lend themselves a little bit better to that, because I find that in commodities there's always like one side that pulls a little more. So it's not as it's a little more difficult, because sometimes you might get one side that will never really reach the edge, and then you have to sort of improvise, maybe use the volatility bands and second standard deviation zone rather than the sheer edge of the session. So there are definite difficulties there, and experience will, your experience would dictate how well you do on those days. So yeah, those are some of my ways to use the VWAP. It is a very useful tool because it's volume weighted average price. If you didn't know what it was, it's like a mean average, but it has volume inside it. So if I'm using like, some kind of an EMA just as a, directional indicator sort of thing, I don't really use them as levels, but I do use them as timing tools. So if you see them diverging, there might be an opportunity for mean reversion there. That's how I like to look at it. Shane A says, if you use limit orders, do you still have to worry? Well, yeah, I mean, with limit orders, if there's no liquidity there, they will fill you at either at the limit or better. So the definition of a limit order is that they have to give you that price or better, right? So one thing with limit orders is that, yes, you can get a better price, but still, if there's no liquidity between like some people use very tight stops. They use like 10 ticks and 20 ticks on NQ. And if there's nothing there, if the market is so thin that there's nothing there, it's very likely that the market might skip over your entire limit order and never fill you. It just depends on, how gappy the market is. So let's say hypothetically we have a weekend and you set a nice limit order at... let's go to NQ chart and back to Topstep X. So let's say that you set a nice limit order at, let's go, you want to buy at 1800. Let's say 18,300, let's say all the way down. So 18,300. But the price skips all the way below it and opens up at 18,000, right? What's going to happen with your limit order? It will never fill because the market just skipped over. So it's not going to give you a better price. It's not going to fill you at all. So that is, a danger of having limit orders. Then the market is just going to ignore them completely and skip. So, however you choose to approach this, I would definitely size down. Let me just have a look at MNQ, what that looks like. See, MNQ is more liquid, like hilariously. It's still a thin market, but it's more liquid than NQ is, and it has far less gaps in it. So I think a lot of people have escaped to MNQ. So yeah. And low liquidity environments lend themselves to really volatile moves. Why? Because when there's a gap, price just runs through them, so thereby teleporting. Only says, so liquidity sweeps are mainly to take our existing contracts. And can I use order book, order flow, presumably as a reference to where the biggest sweeps will be. So liquidity sweeps, they are usually not caused by low liquidity. They're actually caused by high liquidity and a lot of orders coming in. So liquidity sweeps, I'm not going to be able to show them during London because they're not really that plentiful. Like London as a session in general, especially for the products that we currently have, it's pretty thin, right? It's nowhere near as crazy as the New York session is. But what a liquidity sweep means, it's a very strong vertical move in a very short space of time. So it's not the price jumping over a level and then just printing nowhere and then usually dying a death. It's actually a price kind of catching a bid in like a nanosecond because of the amount of orders that have come into the market in such a short amount of time. So it's on Bookmap, you can see it as a vertical move up or down with a lot of big bubbles coming in. So we have the bubbles, that's what they look like. So sweeps versus liquidity gaps are two entirely different things. And they look different, they have a different outcome. The sweep might bring a very quick momentum move away from it, whereas a liquidity gap might bring one drop or one rise and then just nothing. Because they run into another area where there's like a little bit of orders, but then nobody's interested. Two very, very different things, okay? Very different things. Ninkasi says, what is Bookmap? Bookmap is a visual representation of the ladder that uses level 2 data to see where the actual orders are. So if you are, like, it sounds like you're relatively new to futures. Futures are a centralized exchange. So when you see these numbers next to the prices, that's the contracts available at that particular price. And it's always the same, whatever platform you look at. If it's a futures data feed, it all comes from one and the same exchange. So whatever platform I show you, ES is going to be showing me that there's about 117 contracts at 1975. Doesn't matter whether it's Bookmap, MetaTrader 5 via AMP that uses CQG, Topstep X, Ninja Trader, Quantower, like whatever platform you use, if you pull up the DOM, the ladder, it will show you the same information. And it is dynamic. It's very dynamic, but that's what it is. So it's just an easier way for me to look at what is going on the ladder and to have a little bit more feel about certain areas and certain levels that we might be looking at for positioning ourselves. Ricardo says, what time frame is best for VWAP? I nearly read that as what, like WTF. So WTF? What? No, what time frame is best for VWAP? I noticed 1 minute is totally different from 15 minutes. That shouldn't be. So if you have, there is a time frame component to VWAP, but it should only be like a few ticks difference. So let's have a look at, hold on, I didn't switch on my, didn't connect my Ninja Trader. Hold on, let me quickly do that. I'm going to drag out copper. Okay, so copper, let's do the overnight VWAP because that's what I've got on the other thing. So it shouldn't be that different. It should be like within a few ticks, which shouldn't really matter all that much. Okay, so you can see that on the 1 minute chart on copper, my VWAP is at 398.81. And over here on the 30-minute chart is at 398.85. Like, how different is that? Like 4 ticks? So not that different. So if you are finding that your platform is massively different on different time frames, that's something to do with the calculation that that indicator is using. And if you're on something like TradingView, I will be a bit suspicious about the calculations that they use. Now, if you look at our VWAP indicator, like there's a few other things in there, the settlement, the stuff, but I have several calculations for it. And let me just find, yeah, so where is the calculation? Because we do have different calculations for the volatility bands that result from VWAP, because I don't use the simple sort of Bollinger Band for my standard deviation bands. If I am going to use it, like for mean reversions and stuff, I like to use the standard deviation that's based on VWAP. That tends to work really well for me. But if you look at here, we have different ways of calculating the standard deviation bands. So you have percentage, VWAP curve, Bollinger Band, TradingView, which has a different calculation, and Sierra chart, which also has yet another different calculation. And the same will be true for how they they calculate VWAP and how much weight they've given to the actual time frame. But because it's volume weighted, the time frame should not be that much of a factor. What will be a factor is when you anchor it. So are you anchoring it at the start of Globex? Are you anchoring it maybe at midnight in London? This is a different thing. It's like an hour out. Are you anchoring it at the start of London? That's the session VWAP. All of that will mean that the VWAP will be different a lot. But if it's the same measure, if it's Globex open, then the time frame shouldn't come into it. And this is another reason, like I like accuracy. I'm a little bit like Robert Cooney, one of our coaches. So he is very technical and very granular with what he wants to see from these technical indicators. And I'm kind of the same. I like to nitpick with, how well the calculations have been done. And then if something is vastly different and yet it's supposed to be the same, I always doubt the calculation. So this is why I trust the indicators that we've created. I always keep a close eye on it, and me and my developers work very closely to make sure that all the calculations are correct, that we are not using some weird calculation that is completely throwing off the levels and really making the whole thing a bit useless. Alexander K says, Dee, any general tips and tricks to keep it in mind with trading DAX? I'm used to trading the OMX S30 during the Euro Open. I find DAX to be moving kind of weird and stops me out. Any tips? I like to use at least a 15-minute chart on DAX, and then I like to use the profile for the extended moves, especially when we have these extended moves. So right now we're kind of arriving into an area of average session range high. So what I want to see here is a potential for an auction fade, but I'm not going to get involved until the 15-minute chart prints a reversal. Why? Because with DAX, it's a very smooth product and it doesn't whip you out massively. However, it can have large candles. Like if I look at this size of the candle on 15 minutes, it's still 53 points, 53 ticks, which is quite sizable, right? However, once it moves into a one direction move for the next sort of hour and a half, 3 hours. But I will say this, DAX does have V-shaped reversals. So I don't know what sort of trades you're trying to do on DAX, but DAX almost always does a head fake at the first 15 to 30 minutes during the open, then reverses, and then carries on to into whatever it's going to do. So I actually avoid trading DAX for the first 90 minutes of the session, sometimes even 2.5 hours. And then I find the most obvious move, and that's the one trade that I will do on DAX. Sometimes I will do 2 trades if we're having a very lively day, up and down. But generally, for me, DAX is a kind of a one-shot, one session, one trade, and, done. So right now, like I said, I will be waiting for the next 6 minutes to see exactly what happens here. If we get a bearish candle, that will be a trade to take for me for the day. Why? Because I have a reference level, which is average session range high. If that fails and it doesn't actually bring me any committed move to the downside, my next area to look out for is the average daily range high all the way up at 177.20. So for now, I'm not chasing this. There is no way I'm going to chase this because we have some developments on the weekly chart. Like, look at this. And like, is this longs? I would argue that we're not done yet with this move. And so far, yes, it's been long. But to me, I want to short equities at this time, especially DAX. So we'll see how that happens. Another way that I like to use DAX is to look at either, ideally a confluence of VWAP and initial balance edge. That would be the most perfect setup. So if this overnight VWAP continues to climb and then it sort of hits the initial balance high, and then we also happen to get a pullback down to the initial balance high, that would be a star setup for me, and I would definitely take that to the long side. The way we are now, this is potential for an auction fade, but also potential to just stay out until we hit the ADR high rather than a SR high. Those two are different in the way that a SR high is my measure for just the regular trading hours, shortened London session, and it can bring very nice reversals from it. So those are some of my tips, how I trade DAX. I don't trade it during the open. I hate it during the open because, look, head fake, then we go up. Head fake, then we go down. Like, it happens so often. Head fake down, then we go up, and then we chop around, finally find direction. Neutral day, I actually faded this the other day, so that was a pretty fun move. If I go back in time, there was a demand level there that I was referencing. God, my accent is going all screwy because of the, the only people that I talk to are Topstep guys, so I'm starting to take on some weird accents from them. Okay, so this is a day where we just went down, and down. Had a little bit of a upside movement. So that's an odd thing to see. And then here's another one, up, doji, then we go down. So that head fake for the first hour, it's a very high probability event. So I really wouldn't get involved in that unless you're going to fade it. So the market goes one way, hits a level. Like today, there's an argument that I could have used the value high to run the head fake trade in the opposite direction. But again, I don't trade the first open. That is a rule of mine, and I will not be breaking it. So stop limit is dangerous because it may not be filled right. Well, no, stop limit is something different than a limit order. But yeah, it might not get filled. That is, it's not a danger. Like, is it a danger that a market won't fill your order? It just skips over it, so you have to find another one. But a stop limit is a different thing to stop loss, and it's certainly a different to a limit order. Ronnie says, "Morning D, I have also started trading, managed to get into an XFA. Do you have any tips?" Yes, take it super slow. Go down to 1 micro. Don't overtrade. Try 3 trades per day, so have a limit of the amount of trades that you're going to try per session. And then if that doesn't work, just walk away for the day. The problem that happens is, if this is your first XFA, is that your dopamine levels rise because you're so excited that you passed and oh my God, I'm in an XFA. That leads to an increased dopamine that increases productivity and motivation. So you have that urge to trade, and it derails your account very quickly because you do 1 trade on 1 mini, then that doesn't go well. Now you're sitting in a hole of about 300s. And now you're like, oh, damn it, now I have to get out of that. So you trade more and more and more and more. And then the XFA is either gone on that same day, or at best, you're staring at a massive hole, which completely puts you on the wrong end of the mindset that we need to have. So expect that the first week is not going to go well. So plan for it. You go, I'm going to suck on the first day and the first week in an XFA. How do I prevent myself digging a massive hole that I can't get out of? Trade micros. Minimal size. Absolute minimal size. Have a number of trades that you're going to try. Doesn't work. Shut it down. Click that button if you are in the Topstep platform. That's going to lock you out for the day. Don't keep trading. And certainly don't increase size. Because at some point you will get the dopamine levels that we come back, and you will feel more like yourself without any extraordinary measures that can take that can take about a month. But like I said, I cited this study that was done on mice, where they fasted. They kind of did fake dopamine squirts in their brains, and then they fasted the mice for 48 hours, and after 48 hours, their dopamine levels came back into alignment. So that's, a bit of an extreme way to do it, but it does apparently work in mice. So take that with a pinch of salt. Otherwise, if you don't want to do that, then it takes a month for your true brain to come back and for you to stop getting excited over the fact that you're in a new XFA. Adayinka says, do I need level 2 data for my Topstep X, or do I have to purchase from Bookmap for data? You can use Topstep X Ninja Trader if you have that. There is no way to connect Topstep X into Bookmap yet. I know they're going to have their own version of it or something. I do believe Robert Cooney mentioned that. I don't know when it's coming. So for now, there are two options. You can either use TraderVate, and then Bookmap has a connection with TraderVate, so you can just log in via that. Or you can use it via Ninja. They have a Bookmap indicator that you put on the indicator, on the Ninja Trader chart, and you press, I think it's F5, and then it loads it up automatically into Bookmap. So either one of those is an option, but for now, no, we cannot connect Bookmap to Topstep X, sadly. What am I thinking about copper? Nothing yet. There were single prints left behind. Let me just change this in case that I do want to do something with it. But last time I looked, it was not doing much. Like, we are away from levels that I wanted to sort of see. And right now it seems to be taking out the single prints. I don't have a level here. This is just kind of chopping around middle of nowhere. It's a directional move, but even with a directional move, I want to have it be somewhere and then have a committed move away from it. So just by the fact that we tried to go lower and now we're taking out single prints, it's not far enough away from the initial balance for me to try an auction fade. And it's not violent enough of a move for me to try and go into a directional move. So if I were to guess, I'm thinking that we're going to end up in a neutral day type and we're going to go all the way up. So maybe if we get to a point where we're above the value high, which is above 4 evens effectively, that might be a good level for me to fade this. So I would want to short it, but not before we are sort of doing a responsive neutral day type strategy. And that means going all the way through value to the other side. That's when the probabilities of this setup will come into that asymmetry that I'm looking for. And in fact, looking at some supply and demand levels, we do have the Asia high with the average session range high all the way up here. So that is my level of interest. So all the way up from 4 evens and then all the way up to 40160. That's the entire area where I want to be a seller. But right now, nothing. There's no setup. I meant algo trading. Hold on, did I miss something? All right, morning Dee, I have started algo trading. Right, algo trading. Algo trading, I mean, they do allow automated strategies. You know, Robert Cooney uses them. So yeah, if you're algo trading, then that probably takes out some of the discipline issues. Yeah, which is your favorite time frame? I don't have a favorite time frame. I use something called the OODA loops or OODA loops to jump through time frames, and my levels are not necessarily based on a time frame either. So I don't have a favorite time frame. I mean, if I'm going to look for a reversal, I want the 15-minute chart to show me a committed reversal. Rafi says, is this a new combine you're trading? What happened to the previous one? There were some problems with the brackets on the previous one, and I didn't really notice it in time, and it just ran to my daily loss limit. So it was, basically I set a stop loss, and then I was trading gold, and there was that drop, and it just ran straight through the brackets. So I was like, I don't know what happened. But yeah, and then they came up with a fix. But at that point, if I'm already looking at, near maximum loss limit, there's just no point. It's like a lot of work to go down to micros and stuff, so I just decided to start a new one. Yes, sadly was a slight technical issue there, and it happens. It is what it is, so yeah. I have quite a few combines I'm working on, just kind of testing different ideas, different times of day, different products. I've been liking the YM quite a lot for the NY session. So I might be trading YM today for fast markets, but not in my live. That's on the back burner for now until we know what the hell's going on with the markets. Let's have a look at YM actually, because nothing to see in copper. All right, there it is. Starting on the larger time frame. All right, so some pretty massive drop on the weekly chart. Let's have a look at the daily. I mean, it's attempting to bounce from the daily level, but it's so early in the day. Every time I see these London moves, they typically get completely derailed in the New York session, so I wouldn't really put too much stock in them. London is open with a gap, but we didn't go into a gap fill. It immediately ran upside, but it's kind of range bound here in the last sort of 8 hours. This is a 4-hour chart. Attempting to go higher. How is the auction doing? Not very well. It's building structure, leaving some access to the upside. The range is decent, but nothing like New York. So for me, this would be just about acceptable range, 288 ticks. But so the candles are about 63 ticks, so that's all right. I would probably, during London, trade YM on about let's say 45 to 55 tick stop loss. And then maybe increase that depending on how crazy the moves get during the cash session. So yeah, not much I'm seeing in YM either right now. So the London might have to wait. Yeah, because not seeing that much movement. What's gold doing? Let's have a look at gold. Let's load that up. 30 minutes. Gold also pretty quiet, 78 ticks for the session. That's a no. So what I'm looking for now, I'm looking for a decent amount of movement that we've had during London rather than, chopping around. The only thing I see is DAX. Like literally DAX is the only thing that's moving. So yeah, I'm going to repeat this again. I can't wait until we get DAX into Topstep, because for London session, there's nothing better. Like maybe FTSE 100s, that tends to move really well because that is its main session. But yeah, I mean, nothing really. Smoothness of movement, committed directional moves, clear-cut levels. You can't really beat DAX in London. What's Platinum doing? Just as a last resort. Come on, somewhere. No, nothing. Chopping inside the initial balance. Yeah, guys, it doesn't look like I'm going to find a trade during London today. But I will be on fast markets later on. So we might do some YM trading to Jack's delight. Jack absolutely hates DAX. Do I trade Forex? No, I stopped trading Forex in 2012. I think I traded GBP in New Zealand until about, not very committed, trading, but it was like every so often I might have put on a trade in there. But I moved away from Forex because we went down to zero interest rates or near, and that kind of locked down the ranges. So I want to see the range of whatever I'm trading, at least at 150, 180 ticks per session. If you look at Forex, it's absolutely pathetic. It's like 40 to 50 ticks. Yen has been moving a little bit because they want to make a change. Or maybe they've already done it, which caused some momentum to pick up in the yen pairs, but it's just not consistent enough. It's like you get one good move like once in a blue moon, and then nothing. I don't want that. You know, I'm actually annoyed with crude oil that has stopped moving about 220 ticks per session all this year. So I had to find something else to trade. It's been a long time since like my main product died on me. So Forex in 2012 was something that I traded from 2007-8 all the way to 2012. And then I went into futures. That's how I went into futures. So now like my main focus in some of the combines that I've been doing has been Dow for the New York session. Apart from that, RBOB, still very slippy. I'm still a little bit on the fence of how well I'm doing in it. It's certainly fun, but whether the results are consistent enough for me to kind of make it into my main products, I don't know. Because I can still find really good trades on crude oil, especially if we have a neutral day type. So few and far between. Trading crude oil, not an easy year, I will say that. A lot of interesting developments and some readjustments of the markets that we have seen since COVID times. Markovic says, what are your thoughts on gold? I said that already. Emil says, what do you think about the 18,400 as a resistance NQ? So I don't think anything of it because all of my levels are higher up. Be careful with NQ as well. It's the same Gappy market, so whatever price that you want to take, you might be in for a surprise that it just doesn't fill it because there's no orders there. I don't see the 18,400 as any sort of resistance. I see 18,565 as a possible ADR high. Where is the... Yeah, and actually New York session value high from yesterday is at 414. And if we stay above it, that's going to be more upside. If we stay inside it, it's going to be a very high likelihood of a neutral day. So I don't think 400 is any sort of resistance. I would look for, more round numbers like 18,500, 18,000. We have ADR low at 17,925. That would be a very good level for me. For longs. So yeah. Those are some of my levels. So not looking to get involved in the middle. Because this is right now in the middle of the entire range. So yeah. How do you use the Globex high and low during the NY session? I heard I'd like to test those levels most of the time during NY session. Yeah, so I refer to them as Asia high, Asia low. Frequently, you get almost a touch or sometimes even a run through those levels and then a reversal. But if we run through them very decisively and we stick the price above it or below it, like the price consistently stays above those levels and manages a sustained movement above or below, that can be a directional indicator for the rest of the day. But for the most part, I will look to fade that because those levels typically are a little bit further out. So by the time that we reach them, we already have an extended move. Anytime you have an extended move, sort of 7 times out of 10, you will get a fade from it. So that's how I like to approach those. All right, guys. Maybe we have time for one more question and then we can wrap it up. No trades today, unfortunately. Okay. So let's finish it up, especially because there's no trades to take, nothing that would limit our risk anyway. But yeah, do keep an eye on this copper because like I said, if it does start to sort of move through the initial balance. There's maybe a trade there, you know, a little bit risky, but still. And then if we get to those 40000 and above, there is a short there potentially, probably later on in the session. So thank you for being with me today. I will see you later for the fast markets, because now I am on fast markets on Wednesdays. I will also have Markets Talking with Dee tomorrow at 1 p.m. Don't forget, we have Dakota as well. He is streaming now every night from 7:30 p.m. Central, and he goes on for an entire 90 minutes. We are also getting ready to have a brand new segment with Nick for a tick. Everybody knows him, Nick T. So he's going to be doing the Globex Open. So we're getting closer to that goal of having almost a 24-hour broadcast on TopstepTV. So check all of that out. I'm going to sign out now, and I will see you later for Fast Markets. Until then, thank you for watching. Make sure you like, make sure you subscribe. I will see you then.